get more on the outlook for oil from a man with 25 years experience in the energy industry. He's Victor Shum. He's senior principal at the oil consultancy Purvin Gertz. He joins us from Singapore. Victor, great to have you with us. What's the headline for you? I mean, if we do see Gaddafi fall, how far do oil prices fall? Do Brent prices fall?
Brent has a lot more room to fall. In the near term, it could fall below $100. And so if Qaddafi is gone in a matter of days, expectations are that Libyan oil flow will resume quite quickly. And Brent has much more room to fall because Libyan oil primarily serves the European markets, and so Europe would benefit directly, and Brent is certainly heading down.
What does it mean for the economy? Is this a silver lining potentially here for investors?
There's certainly a silver lining. With Brent prices presumably going down toward $100 or lower, European economies would benefit. So everything is going to chip at helping Europe recover.
Right. Now, just tell us also which companies this is going to benefit. You heard one of the members of the rebel council there in Libya talking about how they're back in touch with oil majors like BP, Total, Eni. Who should we be watching today?
Indeed, those European majors you mentioned would benefit, and they are ready to go back in. So the majors would certainly benefit from the fall of Qaddafi, and oil prices would be under pressure, downward pressure, and consumers would benefit.
Now, there's a few other things driving the oil price market at the moment. There's the increased expectation that we're going to get a recession in the developed world, at least. You also have the driving season in the U.S. coming to an end. Give me a target for NYMEX crude and also for Brent crude 3 months from now.
I think that NYMEX will slightly claw back to its elevated level, won't quite get to $100. We do have some supply side concerns continuing. We are in the middle of the hurricane season, and as we speak, there are unrest in Syria and Yemen. So supply side issues will still provide some support for
Victor,
oil futures.
I just want to confirm this. You're saying that you expect NYMEX crude, which is now around $80 a barrel, to move up to $100 in the next few months, and you say that's because of supply side concerns. What about this situation with the economy and the outlook for demand?
Well, I think that first of all, the $80 level for NYMEX has a lot of support, because if oil falls below 80, I believe that OPEC will step in to restrain production to try to keep NYMEX at $80. And it remains to be seen whether we're going to head back into another global recession. There is talk about QE3 in the U.S. to help support the U.S. economy. My view is that, yes, we're going to see slower economic growth in the U.S. and Western Europe, and oil demand growth will be slower. But then most of the global oil demand growth will come from non-OECD countries anyway.
Okay, so if oil heads back to 100, though, there goes our silver lining. We're going to have to leave it there. Victor Shum, senior principal at the oil consultancy Purvin Gertz. Thanks very much.